Charlotte McLeod with the Investing News Network, and here today with me is David Tasker, Managing Director at Chapter 1 Advisors. Thank you so much for being here with me today.
Great to be with you.
It is. It's great to have you talking here. And just because it is our first time speaking, I was hoping that you could start by giving me a brief introduction to yourself and the kinds of things you do at Chapter 1 Advisors.
So we're an Australian investor relations and public relations firm, and I apologise for the background. We're in a quintessentially Australian background. If your viewers can see it, that's Cable Beach off the back of me in Broome. So you'll hear a lot of natural noises, so I apologise for that. But look, we look after a lot of ASX listed small to mid-cap resources, technology and biotechnology companies and help them reach investors. We also have a couple of publishing assets that assist us with that as well. But ultimately our job is to get small to mid-cap companies and introduce them to investors wherever they are in the world.
Perfect. So you work with many small cap companies in the Australian market, and I want to ask you broadly what that landscape looks like right now. Which sectors are thriving and maybe presenting opportunities, and which ones may be experiencing some challenges right now?
Well, what we're seeing is a lot of sectors are actually seeing activity from an investor perspective, particularly in the resources sector and a bit of the buy now, pay later sectors. A lot of that has been driven by a massive influx of new investors into the market as a result of different stimulus packages brought in by the Australian government. So we're seeing a lot of new investors coming into the market and gravitating towards sectors that maybe are well known in this market or they have a natural affinity to. So, you know, a lot of younger people have the buy now, pay later type stocks because they use those services. So they're gravitating towards those. But definitely resources stocks, gold, lithium, nickel because of, you know, recent announcements in regards to EV. But we're seeing a lot of liquidity increase across the board. I think biotech has done pretty well as well, but it's harder for our investors to understand that market. But what we are definitely seeing, it's generally, you know, just a big influx of new investors coming into the market is driving a lot of volume and interest.
And what would you say is bringing those new investors into the market? Is it the COVID packages, as you were saying before? Are there other factors at play?
Well, I suppose there is two factors, and both of them, I think, are COVID related. Excuse me. The first is that the stimulus package that was brought in by the federal government and state governments put a lot of money into the economy, so put money directly into people's hands at a time when a lot of people were sitting around with not a lot to do. So they couldn't go out to parties and events. So they were seeing an increase in income with a lot less to do. So it drove them, and there was a lot less things for them to invest in or to, gamble's the wrong word, but to take a punt on. So the stock market became an obvious one for people to look at. And that's where we saw a big influx of new money into the market.
Okay, so it sounds like access to capital for the companies is strong from the retail investor side. How would you say it's looking institutionally at the moment?
Yeah, institutional is a little bit different because obviously they don't play in the small to mid-cap sector of the market. So we are seeing the institutional part of the market is gravitating towards those larger stocks, but very well supporting those larger stocks. But in the small to micro end, it's definitely the retail market coming in.
Okay. Now, what are the companies that are getting access to capital doing with it? Are you seeing them able to move forward despite restrictions related to COVID-19? How are things looking in that respect?
Well, I suppose the thing is, in the Australian market, a lot of companies, particularly in exploration, resources and biotech who are in various clinical phases, aren't actually being hampered by COVID. So drill rigs are still drilling in Western Australia, exploration is still occurring. So what we're seeing is a lot of companies are bringing their spending back to Australia because they can move freely in this market from an exploration point of view. So if I look at where the money's going and what it's being used for, it's actually being used, you know, on the projects, in the ground, in their studies. It's not being wasted on admin or corporate overheads. It's really being used to drive value, which is a great thing. So, you know, we're seeing discoveries, we're seeing a lot of drilling. You know, in Western Australia, I know getting geologists is tough, getting drill rigs is tough because they're in such high demand at the moment. And the influx of cash has meant that, particularly in the resources sector, the drill bits are spinning and they're spinning hard.
You mentioned that you're looking to bring attention to Australian companies from people around the world. And it sounds like as companies are progressing there, that interest definitely might be picking up. Is that something you're seeing?
Definitely, and we're seeing the Zoom phenomena where all of a sudden now we can talk to people anywhere in the world, and we're not hampered or hindered by location. So a lot of the activity we're certainly doing for our clients, but the results that we're seeing are based on global audiences. So we're definitely seeing a big impact and an increase in the amount of global audiences that are coming and looking at the ASX, particularly also because of liquidity. So it's easy to trade the stocks, but there's very high liquidity in this market.
Okay, now speaking specifically about the resource space, because we have an audience that's probably most interested in mining, are there any trends that you would identify there, themes you've noticed this year? I think you've talked about a few of them, but if there's anything else you would identify.
WA Gold is a big one. So we're seeing a lot of support for companies that are drilling big campaigns in WA or Australia, but we're seeing a lot of interest in WA gold projects because obviously gold price on a relative US to Aussie term is very high at the moment and very profitable for Australian producers. And we're seeing a number of good results. So, you've got De Grey Mining who have just hit world-class grades. You've got Chalice, which is obviously not gold, but nickel. They're hitting amazing grades. And amazingly, a lot of these projects aren't a long way from Perth. They're in close to infrastructure in areas that have been explored for other commodities in the past. And because of this, I suppose, focus on just where can we drill close to home, companies are going over, in some respects, old ground and finding amazing discoveries. So, gold is definitely one that people are looking at, but, the commodities in the battery space, nickel, a bit of cobalt, lithium, are definitely of interest.
Right, and especially I would think with the Battery Day recently, everybody's
Yeah.
excited.
Yep.
All right, what would you say about M&A activity? I know in some parts of the world that's slowed down a little bit because people are having difficulties visiting projects and things like that, but we did have the news recently that Northern Star Resources is going to buy Saracen Mineral Holdings. Do you expect more M&A, and especially because we're talking about the small to mid cap space?
I do. Northern Star and Saracen is an awesome tie-up. Two great companies that have dropped all egos and basically said, if we get together, we're going to really be able to play on the world stage and have an amazing suite of assets. So, the biggest problem with M&A is someone loses a job or someone has to give something up, and usually that's the big argument. But I think common sense is prevailing, and a lot of people are saying, well, if 1 and 1 equals 3 now, and while there's money in the market, money will dictate a lot of those transactions, and common sense will prevail. So I do think there'll be more M&A. I think there'll be a lot of private to public, so a lot of private land holdings in the resources space that have been sat on for a period will probably move into the public space or be acquired by a public group, particularly as the focus is away from offshore projects that can't be accessed due to COVID and back to West Australian or Australian projects. So I definitely think there'll be an uptick in M&A, and I think it'll be led by the money.
All right, very interesting. As we're wrapping up a little bit here, I wanted to know what your best advice would be for investors who are considering small cap Australian stocks right now, or even for investors as a whole, if that's where you want to take it.
Look, I have a general rule, and it's don't follow what everyone else is talking about, because generally if everyone else is talking about it, someone else has made money already. My personal view is I look at the people, what's their track record, what have they delivered, have they delivered in the past, even if they've had failure, how have they dealt with it? Then look at the projects. Do they stack up? Are they just good projects when the prices are really high and demand's high, or will they stack up if the price comes off? And then look at the jurisdiction. How safe is it? What's the infrastructure piece like? And if you generally tick those 3 boxes, sooner or later you're going to make money out of the stock. So I always tell people, don't invest for tomorrow. Invest, for a period down the track that you're comfortable with, but also be prepared. The people win and lose in the share market. So don't invest what you can't afford to lose.
Perfect. And I do appreciate that more contrarian mindset, although I think it's getting a little bit tricky with gold quite hot right now, battery metals in the global spotlight, quite tricky. Any final thoughts you would leave our audience with as we're heading into the last quarter of the year?
Um, Look, it's really about look. Part of the advice, not advice, but part of what I tell to people is don't look at 100 things. Pick 3 or 4 things that you like, do your research, understand them, talk to management, and then invest what you're prepared to invest. What you do see from time to time in markets like this is people spread themselves really thin, and they really lose focus on what they've invested in. So try and invest in something that you can really know and understand, and don't rely on the herd. Make your own decisions, and stick with it, but be prepared. There's ups and downs in this market, and at the moment, particularly in Australia, a lot of people are seeing ups and they haven't experienced the downs. But be prepared that if that happens, what happens to your investment, and does that impact you financially?
Okay, well, I think that's very sound advice to close us off. Thank you so much for taking the time to talk to me from where you are right now.
No problems at all. I'll leave you with one lasting picture of Cable Beach in Broome, and I apologise for the background noise, which was an eagle sitting up on a lighthouse. So next time I speak to you, it'll be in a more professional location.
Okay, well, thank you so much. Once again, I'm Charlotte McLeod with the Investing News Network, and this is David Tasker.